Hey guys, and welcome to my investment strategy for 2020. So I thought it would be amazing for me to kind of put down some targets and aims for 2020 this year. And as I'm just starting, I thought it would be interesting to see what other people's targets and aims are. So please leave any comments and that you might have, or what your aims are for 2020. I'd love to hear them. Okay, and so I'm from England, so I will be using the London Stock Exchange. I will be buying from companies from the FTSE 100. Is this a market I'm familiar with, and most of the companies I know. So this is a quote from Albert Einstein, and compound interest is the eighth wonder of the world. He who understands it earns it, and he who doesn't pays it. So this is a prime example of why in today's society the rich are getting richer and the poor are getting poorer, because not many people understand how compound interest, well, basically how to get compound interest. And so one of the easiest ways at the moment is through dividends, because the entry to buying shares isn't very expensive. I mean, you can buy, I think, Lloyd's for 65p at the moment, and some other companies are less than £1, so it doesn't even cost you much, and they will pay you dividends, which is a passive income, and that's basically what will compound over the years to come. So let's talk about a little bit about the banks and how in today's society people save. So majority of people have savings accounts, and this is an example of what you would receive from an easy savings account. So basically you have an access to these, so you are getting returns of 1.45% if you leave 1.45. I think is the best on that list, and this is pulled from the Money Saving Expert website, which compares all the good banks that give you a good rate on the savings. So as you can see, it's only 1.45%, and if you go to the 1 year fixed, it is slightly better, and they're giving you from the up of 1.4 to 1.8. And if you look now, the rate of inflation is actually 2.1%. So if you are saving your money in banks, you are not even beating the rate of inflation. So the pound that you put in today will be worth less than the pound that you have in the future. So you're basically losing money. And so this is what is happening. So your bank is giving you 2%, because I rounded all them figures up, so the maximum amount. But if you invest in shares, the possible return is 10%, and on average, and this is an average, most investors who invest in shares tend to receive a 10% return over the year. So as you can see, you don't want to be saving your money in the bank. You don't want to keep it there. So my aim this year, as I'm just started, is 5%, and that's quite. It's not a lot, but I don't want to aim too high. I want to keep it reasonable, because I have just started, and I'm not a financial advisor. So any of my videos that you watch, please don't use it, because it might not be it might not work for you, but it might work for me. So please don't take any of my basically advice. So great. So how am I going to do this? So at the moment, I'm using a application on my phone called Free Trade, and basically they don't charge you anything for buying and selling shares, which is absolutely fantastic, because before you had to use other brokers, which would charge you up to a minimum of about £10 every trade you did. So that was really expensive. So anyone who was investing small, well, it wouldn't be worth it to invest £1 or £2, because they couldn't do it. So with Free Trade, it's allowed everyone to invest, even if it's £1 or £2. And I've left the link, the free share link. So basically, if you want to join the application, please use the share link, and you'll get a free share worth up to £200. And everybody loves free stuff, so please use the link. Okay, so how I'm going to achieve this. So basically, my aims this year is to save roughly about £500 a month, which is a decent amount, and I'm trying to keep that regular throughout the year. And obviously, if all goes well, then that will be maintained until the end of the year. And on top of that, I will be refraining from buying excess. So maybe I will eat more or more meals at home, go out to takeaways less, and save money on stuff that I shouldn't buy, that I don't really need. And so hopefully that will be a substantial saving in the long run over the whole year. And on top of that, spare change. So banks nowadays have a spare change function where they basically round up your pound and they deposit that at the end of the month into a different account. And that I'm using that spare change, as well as obviously 5p, 10p, 20p, 30p, 50p's that I'm saving throughout the month, and basically I will total all them, put them in the bank and straight into my free trade account. Yes, and so my investment strategy is basically to focus on companies that I like or use in the FTSE 100. And so companies like Tesco, which I use regularly, is my local supermarket. And I have a contract with Vodafone. So Vodafone will be maybe a company that that I have invested in. And Shell, where I fill up my car every so often. So that's my investment strategy, and I recommend using or buying those companies, because if you're buying them, then you value what they give you. So basically, in essence, the company has good fundamentals, because and a lot of people use this, and this is basically what it means. It means that the customers value the product that they are buying, and so they will keep returning again and again. And so those companies are less likely to go out of business, because they have repeat business and customers enjoy or value the product that they are buying. And so yes, and then finally, obviously, the graph that you can see, even if there are downturns or there's a market crash, or the value of the FTSE 100 will always generally go up. And so it's important to not to panic when things go down, and to sell when you don't need to sell. So these stocks that I will be buying will in 2020 I will probably keep for a very, very long time, because they are so stable and the companies are so large. And finally, government bonds. And government bonds are generally uh, give you more stability, so the prices won't fluctuate so much up or down, but they will give you a steady income, maybe 1%, or 1.5%, 2%, depending on which government bond you've invested in. So this is a small return, but it's more secure. And the only way I'm going to be investing into government bonds is from my extra savings. So the £500 will be going into the FTSE 500 companies, FTSE 100 companies, and the money that I'm having from my spare change or from buying excess would be going into government bonds. And the government bond that I've picked is called UK Gilts, which is ticker symbol VGov. And I think the dividend payment for the whole year is 36p. But the great thing about that is that they pay you monthly. So I think they pay you £3 a month. And obviously, when you have one, it's 3p. But maybe if you have 10 or 100, it's 30p or £3. And with that, you can buy a substantial amount of shares over the years. So yes. So, and finally, once I've um, basically need to move on and educate myself, and these are some of the sites that I use. Morningstar is a really staple. It's one of the first sites I use to go check a dividend, check a share, to see what the yield is, or the graph on some of the dividend yield. And they have quite a few articles there. And what I find really helpful is that they have a star rating. So 1, 2, 3, 4, 5 stars generally gives you a good indication of what the company is like, and how well the financial advisors have rated it. And Another site that I use is Simply Wall Street, which is absolutely fantastic. I recommend this to everyone. What's so great about it is that as a new financial investor, they show you on one page the whole company's details, so the dividends, the growth, the assets, the debt, everything that you could possibly want to know about the company is all on one page, and you can then make an informed decision of whether you like what the way the company is being run, or if you don't, and if you don't want to invest. So it's a really straightforward, simple way to kind of analyze stocks. And moving on is the Motley Fool, which is basically a group of financial advisors who post regular articles every so often. I like this because it gives me an insight on what other financial advisors are looking at, what prices of shares have gone up and what prices have gone down. And for me, that sometimes when prices have gone down, I can have a look at those shares and see maybe if they have a possibility of going back up. And so it gives me an opportunity to have a look at loads of different varieties of shares. And then Market Watch, which I haven't really used. I don't really use a lot. It's similar to Morningstar, but I ended up using it once or twice because Morningstar was having some sort of issue a couple of days ago. So I was like, oh, I need to find some of the website, and I came across Market Watch. So it's an alternative. And moving on, just ETF, which focuses on just ETF as it says. And it basically gives you basic information about the dividends and the charges that ETFs, what they will cost you roughly, because all ETFs have a small charge. And last but not least is Dividend Max, which shows you the dividends that you can possibly receive from a share. And you all you do is you put in I would recommend that you don't actually use the website, but go on into Google, type in the company, and then write Dividend Max afterwards. Click on the first link, usually from which takes you to the website. Pop in the amount of shares that you're possibly going to buy or have, and then it will tell you when your next pay is, how often the company pays, whether it's biannually, quarterly, and then the cut-off date for the next dividend. Whether you own the shares before that date, so you do get paid, and then the total amount. So it's great. It's essential to know when you're going to get paid and how much you're going to get paid. So yes, and finally, to keep myself on top of things, I'm basically started reading some books about finance, and the first book I've started is Rich Dad Poor Dad. I don't tend to read a lot of books, but I thought maybe if I read 4 to 5 books for the whole year, I think for me that's a good starting point, as well as watching YouTube videos and other content creators, which will also increase my knowledge, and hopefully over time I can better understand what I'm doing and how to do it and when to do it. And when not least, so moving on, always trust your gut. So this is something that I've seen a lot of people on YouTube saying, and for me, probably need to basically follow. If obviously if there's a downturn and everyone's selling, I kind of need to go, all right, I need to take a step back and hold on to them if I know that the stock and the value of the company is good, and not to follow everybody. And sometimes it's quite difficult. So hopefully I will build this resilience, and not only that, to keep buying if the price has gone below what it's expected to be at, to keep buying, so that overall the cost of the total shares is lower and lower, allowing it to be more profitable once the price does go up. So yeah, so that's a little bit of advice for me personally to hold on to, is to always trust myself. So thank you. That's the end of the video. Thank you. Please comment, like, and subscribe. Anything that you really liked, or you are focusing on yourself in your journey. And thank you again for taking the time out to listen to my plan for this 2020. Thank you again, and please leave a comment and like and subscribe. Thank you.